Hi and welcome to this bonus video showing how to stay in a trade for the longer term, in this case 12 hours, for the 14th of February 2014. So as we join the chart here, I'm just going to move a few things around which you can't see, just so I can set the video off that I actually recorded. So here we can see the market's already in a buy situation, already in the market. We've got the entry point and we're struggling with the R1 level there. I'm just going to pause the video. The market drives through this and hits the scalp level there. When I looked at this, I thought, well, there's got to be a way of hanging in on this trade, and the reason for that is because of what I said in the market view on the same morning, that the market was at a major resistance area in the daily chart. And this is the key to staying in, or trying to decide whether you want to stay in the market for the longer term, is knowing the background of the market. I can't tell you how important that is, which is why in the market view we always start off with the daily chart, so we know where the resistance is in the bigger picture. And when resistance is broken, the market generally drives through that resistance and continues to move higher, which is something that I've been talking about for some time now in the market view. We've got the major resistance at 166, 167, all the way up to $1.70 to the pound. So the market's driving higher here. You can see that we've gone through the scalp now and we're heading up towards the resistance 2 level in the pivot points. We've also gone through the 167 level here, this psychological level as well, heading up to 167.50. So let's just continue to let the video roll there and just unfold. And in the moment you'll see we're going to move on several hours and any time now. There you go. And so I'm just going to pause the video. Well, I'm not going to pause it actually, because here you can see I've gone to the settings to the moving averages, and I'm just going to pop in a 5-bar average. And I'll explain what the extension is on the chart in a moment. So here I'm just setting up a 5-bar average on the chart, and I'll tell you why I use this, because if the market is strongly trending, when it has some potential weakness, I'm just going to pause this for a second. In fact, I'll just drag it along just a bit so that's out of the way. Right. The reason for using the 5-bar average, you can see prices remain above it, and then we have this situation here where the market comes back below the psychological level there of 167. We also have some potential weakness here, and I should backtrack here a second or two. The first sign of weakness coming into the market is a red candle. Here we have 1, 2, 3, 4 30-minute bars where the market's traded higher. We've gone up to the R2 level, and then we get some profit taking coming into the market. The volume is quite high, there's no doubts about that, and then we get some further red with a green candle there as the market tries to move higher. The market doesn't like this. There's obviously a lot of resistance around this level. So the market is brought back below the psychological level, doesn't sell off, and then returns back to green, and then back above the 5-bar average, and away we go again. So this is why I use this, because it's a great test of the short-term trend within any time frame that you're actually trading. Let's just come back to the extension here. We have the red candle come in. I drew 50% below, and what's important here is that the market trades down below it, but it doesn't really close significantly below it. And I know that this area, this 167, if the market can get back above it, it's going to go again to the upside. And again, I deduce that purely and simply because I look at the daily chart. I'm looking at the bigger time frame to see where the big boys are actually trading in the market. So we can see that the market did move higher. It traded up through the R2, and again we met with some more potential weakness here, and the market comes back down to this 167 level once more. And again we see after several half-hour bars here, 2 or 3, that the market then still finds support at this level. It never breaks this line convincingly. Even here where the market came down, you can see that the volume dropped off, so the selling wasn't around, and then the market started to move to the upside again. The problem we've got now is this 167.15 area, the resistance 2 in the pivot. Again, to drive higher we need the market to go through this. We're back above the 5-bar average there. So it's a case of having to sit. Well, I actually didn't sit and watch. I just kept popping back into the study just to have a look, see what the market was doing every half an hour or so. 12 hours is an awful long time to sit watching 30-minute bars, so I've got plenty of other things to do at the moment with renovating a kitchen and so on, so plenty to take my mind off the markets instead of sitting there and being emotionally moved one way or the other, trying, shall I stay in or shall I get out? So by being away from it, knowing the background of the market, I'm able just to come in periodically and just put in where we get some potential weakness with these red bars and just moving the stop up 50% below using the extension tool. So the market managed to drive through the 167, then it went through the R2 resistance 2 there of the pivot. We can see the increase in volume there. Get a bit of weakness here, the market back down and then back up and then traded sideways to higher there. And this is moving on now well into early evening. You can see there we've got 1800, so and of course Friday evenings is the time that the market closes. But the market's not doing an awful lot there. I'm just going to wind this up to this point here, I think is some. And what you'll see me do in just a second is the resistance to the left here in this bar that drove through the resistance 2 level. I wanted to see where we're at, and we're at 167.41. Well, 167.50 is the next psychological target. But by this time, it's late into the evening now, over 7 o'clock, 8 o'clock time, and looking at the amount of pips that are on the table, it's time to actually call it a day. You can see there, I'm just having a look to see where the next upside target may be if I was to hang in there, but at this time in an evening with 80 odd pips on the table, it's not really worth it because the market isn't really going to do too much more. So let me just I got out the trade, finished recording and save the video for this recording, but let's just have a look and see what actually happened after. We can see the market did actually trade up to the 167.50, and even the bar after going into the evening session, which obviously is only about a couple of hours on a Friday evening, we can see that the market was also still trying to press on through the 167.50 area as well. Something else to throw in the mix, watch gold and silver. They've taken off at the moment, and also the Dow is moving back to the upside, and this is obviously having a negative effect on the dollar, which is driving the pound to the upside. We'll discuss this more in Monday's market view, which will be for the 17th of February. We'll have a look and start off again with the background of the market. But I would think, unless something comes out of nowhere, that at the moment we're going to see the pound continue to move up to the upside and probably test that 170 to the pound. So this concludes this recording on how to stay with the trade for the longer term and actually take a lot more points out than the scalp. And just to summarize, it's purely and simply based upon what was in the daily chart. Knowing what was there allowed us to actually take advantage of a break through these areas. It was the same for silver. It broke the $21 yesterday, and that now has broken the mold, the same as the gold market's broken out of its sideways channel. And we should see some exciting things with regards to the currencies and the metals, and also the stock market going forward in the next few weeks because of these breaks that we're seeing in the daily chart, which then allows us to take advantage, trading with the trend inside of the 30-minute chart, which we saw on Friday there. Okay, I hope this helps. Any questions, do let us know. And all things being equal, see you in the 17th of February market view. Enjoy the rest of your weekend. And as ever, thanks for watching.